Are you looking to invest smarter and stay ahead of the curve in 2026? As artificial intelligence continues to revolutionize the financial world, it's now easier than ever to make data-driven, highly informed investment decisions. With AI tools designed to analyze massive amounts of data in real time, you can uncover opportunities, minimize risks, and maximize returns like never before. In this guide, we'll explore the top 5 ways AI can help you invest smarter, giving you a competitive edge and enabling you to make the most of your investments in the fast-evolving market. 1. Sentiment-based alpha scanning. Gone are the days of relying solely on traditional earnings reports to make investment decisions. In 2026, AI tools are now scanning millions of data points, from satellite imagery of retail parking lots to real-time sentiment shifts on niche developer forums, to help investors spot emerging trends before they hit the mainstream news. This sentiment-based scanning is not just about collecting data. It's about identifying momentum in sectors like green energy, biotech, and technology weeks ahead of the crowd. For example, AI can analyze social media conversations, market chatter, and even physical world data such as traffic patterns around retail stores or warehouses. If these tools detect an increase in foot traffic at a retail location or rising buzz about a biotech company on a niche forum, they can predict an early-stage price movement. This predictive ability provides investors with the opportunity to enter positions before the broader market catches on, allowing you to avoid paying a high premium when news breaks. In addition, AI is not limited to just scanning traditional sentiment channels such as news articles and social media. It can also analyze unstructured data, such as voice sentiment in podcasts, and even consider macroeconomic indicators from various regions. This multifaceted approach allows AI to give a more holistic view of market conditions. For instance, AI can predict how changing policies or political climates could affect specific sectors, offering investors insights that go beyond just corporate performance and consumer sentiment. Moreover, this AI-driven sentiment analysis can be continuously refined as more data flows in, ensuring that you're always working with the most up-to-date information. It's like having an expert analyst constantly monitoring the market, looking for opportunities that others might miss. By identifying this under-the-radar momentum early on, you can make moves that others are unaware of, capitalizing on trends before they become mainstream. This sentiment-based AI scanning can be a game-changer for investors who want to get in ahead of the pack and capitalize on emerging trends before they become widely known. It gives you access to unique, predictive insights that traditional financial analysis can't provide, helping you make smarter, more informed investment choices that put you ahead of the curve. As these tools become more advanced, they allow for quicker, more strategic investments in niche markets that have the potential for exponential growth. 2. Hyper-personalized, risk-parity rebalancing. Traditional investment strategies like the 60-40 portfolio, 60% stocks, 40% bonds, are static and don't account for real-time changes in market conditions or your personal financial situation. In 2026, AI-managed portfolios have evolved to offer hyper-personalized, risk-parity rebalancing. Unlike traditional methods, AI portfolios use dynamic volatility adjustments to monitor market turbulence and shift asset allocations accordingly. For example, if AI detects a spike in market volatility or a potential downturn, it will automatically reduce your exposure to riskier assets, such as stocks, and increase allocations to more stable investments, like high-yield bonds or fractional real estate. This dynamic adjustment is based on a personalized risk profile that takes into account not just your age, but your career stability, cash flow needs, and risk tolerance. It ensures that your portfolio is continually optimized for your personal financial goals, adjusting to the current market environment. The beauty of this approach is that it takes the guesswork out of portfolio management, allowing your investments to be automatically rebalanced based on real-time data. It provides you with peace of mind, knowing that your portfolio is always aligned with your risk profile and financial objectives, regardless of market conditions. This personalized and adaptive strategy helps to minimize risk while maximizing long-term growth, making it an ideal way to invest smarter in 2026. Additionally, AI's ability to analyze a wide range of variables and make adjustments in real time makes this approach far more efficient than human-managed portfolios. The constant, automated adjustments ensure that your investments aren't left vulnerable to sudden market shifts or outdated assumptions, further optimizing the chances of higher returns while protecting your wealth. 3. Automated tax loss harvesting 2.0. Maximizing investment returns isn't just about choosing the right assets, it's also about minimizing the tax burden on your gains. In 2026, AI tools have taken tax loss harvesting to the next level by automating the process on a daily basis. Traditionally, tax loss harvesting involves selling losing positions in your portfolio to offset capital gains, but this was often done once a year. Now AI does the work every day, scanning your portfolio for losing assets, selling them, and immediately buying similar assets to maintain your market exposure. This micro-harvesting strategy can add an extra 0.5% to 1.5% to your annual returns, which, over decades, can make a substantial difference in the size of your retirement fund or investment portfolio. The beauty of this AI tool is that it works seamlessly in the background, ensuring that you're always minimizing your tax liability without needing to monitor your investments constantly. It also helps to keep your portfolio diversified while maintaining your original investment strategy. Furthermore, AI's real-time capabilities allow it to react to market fluctuations and changes in asset values immediately, ensuring that you're never leaving money on the table. Instead of waiting until the end of the tax year to identify opportunities for tax loss harvesting, this strategy constantly adjusts your portfolio to reduce your tax exposure while still maintaining growth potential. It's a seamless way to ensure that your wealth continues to grow without the concern of missed tax-saving opportunities. 4. Generative scenario stress testing. Before making any major investment decisions, it's essential to understand the potential risks and rewards. In 2026, AI-powered generative scenario stress testing provides a deep dive into your portfolio's vulnerabilities. With this tool, you can input various hypothetical scenarios such as changes in inflation, economic downturns, or a loss of income, and the AI will run thousands of simulations to predict how these scenarios could impact your wealth. Using Monte Carlo simulations, the AI generates up to 10,000 different possible outcomes based on a variety of variables, identifying the weak points in your portfolio and suggesting hedges to reduce risk. For example, if inflation stays at 4% for the next 3 years, the AI will forecast how that scenario affects your investment returns and what adjustments you should make to protect your assets. This type of stress testing is invaluable for any investor looking to make informed decisions in a volatile market. By running multiple scenarios, you can see how your portfolio holds up under different conditions and make adjustments to minimize potential losses. This proactive approach allows you to protect your investments from future uncertainties and take more calculated risks based on solid data rather than guesswork. 5. AI-managed thematic baskets. Instead of investing in broad market indices, in 2026, AI allows you to create highly targeted investment portfolios, also known as thematic baskets. These custom portfolios focus on specific themes, such as water scarcity infrastructure or post-quantum cybersecurity. AI scans global markets and selects the top companies in that niche, automatically managing the weightings to ensure your portfolio is optimized for growth in that particular area. This method allows you to get the targeted growth of a specialized fund without paying the high management fees typically associated with actively managed funds. The AI ensures that your portfolio is diversified within the chosen theme, selecting companies across different sectors to maximize potential returns while minimizing risk. You get the benefits of a highly specialized low-cost ETF without needing to pick individual stocks or pay for a human manager. Investing in thematic baskets allows you to align your investments with your personal values and interests, while still benefiting from the AI's ability to make data-driven decisions. Whether you're passionate about sustainable energy, technology, or healthcare, AI-managed thematic baskets provide a tailored approach to investing, helping you target specific growth sectors and enhance your overall portfolio. There you have it, the top 5 ways AI can help you invest smarter in 2026. From sentiment-based scanning to AI-managed thematic baskets, these tools will help you make smarter investment decisions and grow your wealth. If you found this video helpful, don't forget to like, share, and subscribe for more insights into using AI for smarter investing. Let me know in the comments which AI tool you'll start using today. I'll see you in the next video.